weekend all. Ira Epstein of Linn Associates with your Labor Day special. Yeah, this is for the Labor Day weekend. Today's August 30th, 2019. It's Friday, and we're just getting on to 3:25 or so in the afternoon. So this will be the settlement prices in all the stock indices. I don't know that you can go buy anything today. You know, you get right in front of long holiday weekends, different things occur. I do think the energies are real at the end of the day because I'm looking at the storm track, and you need to have one of the outlier patterns come in on the storm track to kick it down through Miami back into the Gulf, and it's not looking like that's necessarily the case. In fact, it's looking to be, from what I just saw on the Weather Channel, one of the outliers. It's a possibility, but not the highest probability. So the market took back all the premium in these markets. You get to see that. The bonds and notes ending up with a bid today. And remember, we have Brexit coming up right in front of us, September 3rd. Parliament's back. It won't decide Brexit, but it's one of the events we'll be looking at. September 12th, the European Central Bank meeting, the 17th and 18th, the FOMC meeting, and next week we have employment data. So there's a lot to be digested. But as we take a look at the dollar index, you know, this market's making new highs on this whole move at the expense of most currencies. The interesting part, the yen is up, the gold was down, so they sort of don't jive if it's safe haven buying. The same thing going on right here. So we'll see where it all goes. In the meantime, on a monthly area chart of closes, we're going to finish off the month down for the month 2%, 61 points. Okay. You're still over the 18-week average, so the market is still, the 18-month moving average of closes, so the market still has an overall upside bias, and you'd have to get all the way under 27.89 to break through that. When we look at where the market came back up to, we're going to finish at 29.21, which is really close to this 29.16 18-week moving average of closes. So the market has gotten a bounce off the lows. I don't know that it's ready to run with that or do anything else than that from that chart. When we sit and we take a look at this week, we can see for the week the market is up 65 points. Therefore, when I look at this pattern and put the swing lines on, until this week's low is taken out, you have a pattern of higher lows and what about higher highs? Well, 29.44 was the high of this swing line, and now we're through that this week at 29.4650. So the answer is we're in an uptrend on the swing line. What about when we apply filters of moving averages on a weekly basis? The market managed to stay over it, as you can see, by 5 points. So that could become one of these numbers that you keep hitting. And if we look back in time, I think you'd agree with me. We came down, first number there. Came back up that next week, even though you dropped hard, fought a battle at the 18-week, fought a battle, and you're still fighting that battle. This market, if you look at moving averages, is fighting a battle with itself. In Bollinger Bands, you came down to the lower Bollinger Band way back here, and that's 4 weeks ago. I know it sounds a long time ago. August 9th week. It held it, came back to the center line, what I call the line in the sand, and just sort of meandering. Going home and looking at momentum and what the market's doing, I think you give a nod so far to the bulls. Now, this is not the ideal momentum. It is trying to push higher, but it's not there yet. Higher would mean you get the red line over the blue and it's pushing up. You're not quite there. But bias is up, the swing line is up. When I come to the Nasdaq, you didn't quite up here get to the upper Bollinger Band. You made your challenge of it 4 weeks ago, and you have, just like in the S&P, been fighting at this 18-week average. So we've had a lot of noise this month, which is typical for the end of summer, and you're just going back and forth in that market at this point. Similar to the S&P, you don't have the crossover of bullish momentum, but you finish the week over the 18-week average. Unlike the S&P, you have lower highs and higher lows. I will call that not trending just yet. In the Dow, you ended up on a trend note to the upside. You've got higher lows, higher highs. Second, you finished up over the 18-week average. Third, the market had a test back here of the lower Bollinger Band and the 100-week average, successful test. Will you stay up? Guess what number I wouldn't want to see taken out? And I think you know it on these two indices we're looking at, three of them. I don't want to see these week's lows taken out. If they are, the market can suddenly be in a problem. The market that's not responding well to anything is the Russell. It's still in a downtrend. Lower highs, lower lows. All it's done is bounce away from the lower Bollinger Band. So the small caps are acting the poorest of everything. It has not turned its momentum up. The bias is down. And should you clear this number, and that number right there is 1525.90, that would end the downtrend from the lower highs, lower lows, but put you right into the resistance areas up here of the 118-week average and not turn the trend up because you got a lower low and then a higher high. This is the market that I see to avoid on the long side so far. In the VIX, the market is still in an uptrend. You've got higher lows. You certainly have higher highs. You fell back last week, challenged the 18-week average. This week, you came back by the end of the week and challenged the upper Bollinger Band. Did that again this week, thrown back a little, but still in an uptrend unless you can take out this 1551. Barring that, market still looks okay. In the 10-year notes, momentum is still, if you will, bullish, pointing up. You've got the higher lows, you've got the higher highs. Remember, on weekly charts, I don't look to see if something's embedded. I don't look to see anything other than is the momentum pointing up, down, sideways, and where is it sideways? If it's sideways over 80, I still consider it bullish, and that's what's going on right there. TLT, running this Bollinger Band. So you get over it one week, under it the next week. This week we finished at 147.28, literally right on the Bollinger Band. So that's acting as your resistance point. Momentum is still, I'll say, to the upside, trend up, bias up. In the dollar index, you went right to the Bollinger top today and stalled out in the market. That is still a very bullish scenario. This is a contract high today. So these are the highest highs these markets have made. Momentum is still to the upside. The longer term trends are still up. We get corrections. Certainly if you were to take out this week's low, which is possible on any of these markets because this was a strange week, being a holiday week, you could negate the uptrend, but I don't think you can turn it down from there because if you didn't take out today's high and just fell lower, this number would still be a support at 97.24. In the eurocurrency, the trend is down, and I'd be watching this week's high. As long as the market's pushing, it's just pushing on that lower Bollinger Band, dropping away, and notice how low you are. Today you got to 109.75.5. That's a new break low for this market. Now you've got the issues, as I said, the fight in the UK about Brexit going to go full tilt starting on Tuesday. Then we have the European Central Bank. We have Miss Lagarde about to step in and take over the presidency in about, 8 weeks or so. So this all gets pretty exciting time in this market, and we'll see what the market can do. But right now, I think the bears have control. And again, I'd be concerned if you took out this week's high. In the peso, still bearish, and now it's going to be up to Congress when they get back. Can they do anything on the old NAFTA deal to put that away and get this one going properly? They haven't so far, and we're seeing the peso weaken. And internally, the peso's not doing all that well. So they need a kick, too. It would help them if they got it, but you've got a pattern of a higher high, lower low. Certainly, the bias is down. Momentum is down. The market broke pretty hard, came back, and if you look at the close today, 49.76, the market is still under the lower Bollinger Band. And you got quite a few weeks under it. This week was under it, if I'm correct. Last week was let's see, the close there was 50.08 and the Bollinger 50.30. And this week we finished at 50.67, but the Bollinger Band was 50.59. So you got 2 weeks in a row under it. It's not excessive. It can drop a little more, but the odds start favoring it's going to move to the right-hand side of the Bollinger Band. In the Canadian dollar, you've got a pattern of lower highs. And if we look at this low right here, 74.96.5 to this low, 74.98.5. You have the lower and low setup. And by the end of the week today, you close 75.14, back under that 18-week average. So this market on the longer term chart is in the bear camp. lower highs, lower lows, and that's why I wanted you to see that. It may not look like it to you. And now if you start taking out the 74.96.5, you can add downside momentum. This market can get hurt very quickly. What would negate the trend? I think getting back over this high right here of 75.89.5. In the Japanese yen, I have this arrow just showing you where we peaked out, but you've still got the pattern of higher lows, higher highs. Admittedly, you're looking at the resistance where I drew this arrow for you to help you with the upper Bollinger Band. But this market hasn't backed off, but there's divergence. The divergence is momentum is trying to turn down. The bias is up because you're over the 18-week, and the trend is up. You got to resistance zones over the past month. 4 weeks right at the upper Bollinger Band and don't seem to be able to push through. In Bitcoin, this is all that I was looking for. And I was amazed. I was reading some stories on the different news wires, and they're going, Bitcoin's big rally. Where's there a rally in Bitcoin? I see the market having corrected back to the 18-week average. It's had a pattern of lower highs, lower lows that was set in this week, but the settlement by the end of the week still was over the 18-week average. It's come back to challenge that line in the sand number. And what the line in the sand, as I define it, is a moving average where the market likes to figure out where to go from. And it seems to me that 18-week average, 18-day average, 18-month average is very important. When I look at Brent versus WTI crude, we know that this week the market added a bit of a bid in WTI because of the storm. And when we look at it, you've gone from 377 up to 533, but the pattern is still set where they're coming together in price. And when you go to the Brent crude, on the longer term chart at least, on the weeklies, you've got lower highs, lower lows. You do have divergence. Momentum is trying to point up, yet the bias is down. You have a market that got a bounce this week of nearly 1.75%, but it didn't take out a prior high. Should you take out this week's low, be careful. You could be back at that lower Bollinger Band before you know what's going on. Let's talk the other side of the equation. If you can get up over 61.50, what happens is you could set up right now higher lows, then higher highs, calling for a challenge of something in this general area, which would catch traders unaware, because I think so many other than the storm still don't see world demand, and they're worried about export demand now because we're getting a lot more product to market via the new pipelines that are on. And that, by the way, that was the Brent. So the differential here is our WTI, which has got the lower highs, lower lows, and now it's into the resistance zone. So make sure that you understood. I was talking here Brent. I might have said WTI. This is the market that I think is going to have that additional supply problem. But here, too, the story is the same. If you take out 57.47, what happens is you could have higher lows, higher highs over the 18-week average, which puts the 6,100 level into the corner is a possible objective to the upside. So the bulls have to defend this right here. Gasoline still pointing down. It's Labor Day demand that we're getting right now. Prices are much lower than they were a year ago. We've got the lower highs, the lower lows. We had a market week that did not have an outside week up. It's a stall. Momentum down, bias down, and you had a bearish crossover. The 18-week average of closes got under the 100-week. That's all bearish news still so far. When I come to the heating oil market, it's still lower highs, lower lows, and as you can see, again, a bit of divergence as the market got a bounce. I think a lot of that had to do with Hurricane Dorian, and the question is the impact, which none of us yet know. This hurricane, before I came on, I was watching the news channel, the weather channel, and they said that if it stays on the interior, it can do a certain amount of damage, but if it turns and goes toward the Carolinas before it hits Florida, well, that storm could take up until Thursday before it hits landfall. So it's anyone's guess as to what the track is going to be. I will be discussing all that and a heck of a lot more come Tuesday morning when I republish my morning subscriber video. Yeah, I get a day or two of a break here. So what I do in that morning is I typically try to record starting 5:30 or 6 a.m. and have this in your hands 6:30 to 7 at the very latest. The recording covers 45 charts typically, and I'm talking, typically speaking, 40 futures, 5 ETFs. I'm going to throw trading ideas at you. And those trading ideas will be off of a chart with a black background, more studies than any of you see here. And the difference is I start you off with the morning's fundamentals. So bright and early, I've already seen what's going on in Europe and Asia. I'm throwing that at you, telling you what's coming up for the American market, reports in the morning. Then I can say, I want you to buy here, put in a market order, put in an exact buy. I'm wrong at this number. It could be on a close. It could be a straight stop. And this is where I think you should be taking money off the table. You'll get all that first thing in the morning. And the idea of that is I'm assuming you're either looking for an idea or you have an idea and you'd love to have somebody to bounce it off of. Well, if you're a regular viewer and you're watching all that I do here, you know I cover these markets in detail. But in my morning video, which can sometimes be 20 minutes in length, I'm the first to tell you that. The idea is if you know markets that you're looking at, you can just click on that market. So you have a slide bar, just click on the one that you want. It saves you time, it saves you effort, and takes you right to the sector that I'm going to be covering. And you can take a look here. There'll be a lexicon on the side. You can click that as well. Are you welcome to visit the whole video? Of course, but you may not have all the time to do that. So I really cover what I think is as much as can be covered first thing in the morning. It'd be like you sitting right next to me. I'm talking to you, not talking at you, trying to you to understand what I'm seeing on the chart action. Do I charge for it? Of course I do. And getting up that early, it's not for free. It's 26.5 cents a day to give it a try. Come on. For 30 days, $7.95. After that, if you feel, yeah, this works for me, $15 every 30 days, but if you buy a year up front, $156 total, and away you go. You can find out more by visiting our website, by clicking up here if you want. It'll take you right to the area you need. And if you go to our website, all you need to do is go under education or research, Ira's morning video. I'm Ira Epstein. You have a good day. I'll see you tomorrow. Actually, Tuesday. Sorry about that.